Morning, everybody. Welcome to a DP webinar on a Tuesday, which we've just started doing again just for a little bit here at mid-year as we revisit some COVID era programs. Today's topic will be the ERC or the ERTC. Sometimes it's referred to the Employee Retention Tax Credit Program. Tracy's put together some slides around updating and reminding you about eligibility and other facets of that program. And with us today, we have a full house. We have Tracy Clark, Kevin Wilson, Angie Trapp, and Nick Summer from our tax team. So we are here for your questions. If you could put those in the Q&A section of your screen and not the chat, that will be helpful. That way we can retain them later. And you can key those in anytime during the presentation. You don't have to wait till the end. Sometimes we stop in the middle and answer questions if it's a timely topic. And I think that's it. Tracy, how are you today?
I'm good. How about yourself?
It was a nice long weekend. I feel relaxed and recharged.
Yeah, that was really nice to have an extra day off.
Yeah, for sure. So why now with the ERC? Tell us what's the timeliness of this topic as we head into the second half of the year?
So we're actually going into the ERC part of the year that is covered by ARPA. So the first ERC was put into place for 2020, and that was covered under CARES. And then the CAA came in and covered January through June, and now we're into the ARPA covered portion of ERC. But I also want to just get the word out a little bit more about ERC. It is a really robust program. It can be a source of financial I don't know, a lifeline for a lot of clients, especially if you're in some of those industries that were affected by closures or significant decline in gross receipts. So we're trying to make sure that people have all the information that they need and they know how to proceed forward if they do think that they qualify and they haven't done anything about it already. Or also to our clients that are already participating in ERC, I want to talk about the qualifications as we move forward. It's a little bit different in 2021 than it is in 2020. So I'm going to address all those things as we go. Okay. So basically, what is the ERC? So the ERC is a refundable tax credit that businesses can use on qualified wages, including certain health insurance costs that are paid to their employees. And it's certain time periods that it's paid, and it's certain amounts that are eligible. So that's the first thing I want to cover is that time period for each act. So we had the CARES Act, which covered the wages paid between March 13th, 2020 and December 31st, 2020. That doesn't mean that all those time periods are that doesn't mean that a employer could be qualified for that entire time period. In fact, there's very few that actually qualify from March 13th all the way through the 31st. So we're going to talk about that in just a second. The CAA covered wages between January 1 and June 30th of 2021. And then ARPA is doing July 1st through December 31st. And then we hope that for our sakes that this program is over by that time, that we won't need it. Okay, so who qualifies for this? Most employers, including colleges, universities, hospitals, and 501c organizations following the enactment of ARPA can qualify for this credit. Previously, the CAA expanded the qualifications to include businesses who took a loan under the PPP programs, and that included your initial round and also the second round that we're using now. So that really opened this whole program up, because previously they had said, okay, it's an either or. You either can take advantage of the PPP program or you can take advantage of the ERC. And once they, and I think that happened on the 27th of December, once Trump signed into law that people could go back and claim the ERC for 2020, that created a huge revenue stream for a lot of businesses. All right. So what are those qualifications? Well, the qualification is determined by one of two factors. So you only have to meet one of these. A lot of times people get confused and think they have to have both of the qualifiers, but they do not. They just have to have one. So the first one is a trade or business that was fully or partially suspended or had to reduce business hours due to a government order. So you've got to have a hold of that order. It can be an email, it can be some kind of letter that you received, but it has to be from the government. It can't be something that you as an employer decided, hey, times aren't so great, so we're going to cut back on the hours that we are doing business, or we're going to partially suspend part of our business because we're, there's just not the opportunity to make money out there. This has to be a suspension due to a government order. So think about like restaurants and gyms and any of those non-essential businesses. All of them were affected by this. They were asked to suspend or partially suspend their business. So they would qualify automatically. The credit applies only for the portion of the quarter that the business is suspended and not the entire quarter. So I know in the state of Virginia, those were all lifted here on May 28th. So after that point, this is no longer a qualifier for businesses in the state of Virginia. Some businesses based on IRS guidance generally do not meet this factor test and would not qualify. So we want to think about businesses that were considered essential, unless they have a supply of critical material goods disrupted in a manner that affects their ability to continue to operate. So this did happen to people. So they may have been an essential business, but due to the supply chain, they couldn't get what they needed. So maybe like the manufacturing of some material that they had to have was suspended. And if that disruption caused them to not be able to operate under full capacity, then they would fall under this. Businesses that were shuttered but able to continue their operations largely intact through telework. So you send all your people home and your physical business is shut down, but everyone's at home working. So in that case, you would not qualify. However, any of these businesses may still qualify for the credit with the second factor test. And the second one was an employer that has a significant decline in gross receipts. And there were two different things for this. So the thing you have to consider is which year you're talking about. So for the CARES Act, which covers 2020, the gross receipts had to be 50% below what they would have been in a same quarter as 2019. So you want to look at second quarter of 2020 as compared to second quarter of 2019, measure whether you're 50% or below, then you could qualify. When you become unqualified is when when they're no longer eligible is in the calendar quarter immediately following the quarter gross receipts when they exceed 80% as compared to the same calendar quarter in 2019. I don't usually see this situation. Most of the time what we find is if somebody is down 50% in, let's say, the second quarter, then they don't really get above that 80% anywhere in 2020. But that's how you have to look at this. So you qualify on a quarter that's 50% or below, and you unqualify when you exceed 80%. So you want to look at that for 2020. Go ahead.
Tracy,
Question?
can I just jump in with two questions that I think are pertinent to this section?
Absolutely.
So first off, Heidi asks, Would following CDC guidelines apply? Our company had to close branches following outbreaks. So I think that would be the previous slide.
So, no, it does. I don't think that that qualifies. I think it has to be a government order. And I don't think that the CDC actually did that. Nick, you want to weigh in on that one? I haven't run across that, but I can certainly look into it.
No, I've gotten that question before, and I'm pretty sure I'm with you there. I think it has to be the government ordered
Yeah.
shutdown.
Because I know like when, you know, you have those places like, you know, I don't know, childcare facility that they have a teacher who comes down with it and they have to shut that whole thing down. I don't think that that qualifies, but we can double check on that.
Okay, thanks for that. And then Nat asks, in determining a 3-month period, does it have to be quarterly periods or just any 3 consecutive months?
It has to be quarters, unfortunately. So,
All right. Thanks, Tracy.
yeah. Okay. All right. So in 2021, you still had your same partially shut or fully shut down. So restaurants and gyms and other businesses like that still qualified under that partially shuttered or full shuttered qualifier. But they changed it for the decline in gross receipts. And now they said that you have to have a 20% or more decline in gross receipts compared to the same quarter in 2019. All of the comparisons go back to the 2019 year. That's prior to the pandemic. So they don't want you having to compare, you know, second quarter of 2020 to second quarter of 2021. They want you to go all the way back to 2019 to make sure that you have a decline in gross receipts. If you're a new business, the IRS allows the use of gross receipts for the quarter in which you started the business as a reference for any quarter which they do not have 2019 figures because you were not yet in business. So if you're a new business, it might take a little more due diligence on your part to kind of seek out the rules on that, but it's worth it to look into it. But yeah, so 2020, it's a 50% drop to qualify, and then in 2021, it's a 20% to qualify.
Casey, I'm going to jump in with one more question regarding the CAA. How many employees do you have to be under? For the
Yeah,
CAA?
I'm going to go over that. For CAA, it is 500 full-time employees, and I'm going to talk about that in a minute too.
Okay, great. Thanks.
Yep. Okay. And then we had ARPA come in, and what ARPA did was they said that you could use the quarter preceding the quarter that you're in to determine whether or not you had a 20% decline. So everything was the same, except you could use the preceding quarter. So that was helpful. So if you were trying to figure out if you were eligible in, let's say, third quarter of 2021, you could look at third quarter, all of the gross receipts here, but obviously we haven't even hardly started it. But you could look back at quarter 2 to decide whether or not you had a 20% drop, and that would qualify you for third quarter. While additional information is required as to what changes will be made on tax forms to claim the credit, employers will use the form 941X to retroactively file for the applicable quarters in which the qualified wages were paid. And you have up to 4 years to apply for that. So in 2020, you've already kind of used up 1 year. So you'll have 3 years to look at your 2020, but you have 4 years from the 2021. Is that what you remember too, Nick? Is that right?
Yeah, I think those are the right amounts.
All right, so the amount of credit. So for the CARES Act, which covers your 2020, it's 50% of the qualified wages paid to the employee plus the cost to provide health benefits to the employee. The max credit that you could get for any one employee would be $5,000, and that's for the entire year. So from whenever you started to qualify for ERC all the way through the end of that year, the max you could earn for any employee would be $5,000. And that's significant because when you came to 2021, they changed the rules on that. So they said now the credit amount was going to be increased to 70% of qualified wages and healthcare, but you would have to earn that per quarter. You could earn that per quarter. So it was much more lucrative. So the max credit you could get was $7,000 per employee per quarter. ARPA extended the program because it was going to end on June 30th. ARPA came around and extended it to the end of the year. So it's still that same 70%, 7,000 max per quarter. So you could potentially get back $28,000 on each employee that you have that qualifies for this. All right, so how do we figure out the wages? In general, they're the wages that are subject to FICA taxes, as well as your qualified health expenses. They have to have been paid after March 12th, and they qualify for credit if paid through December 31st of 2021. So March 12th of 2020 all the way through December 31st of 2021. The only thing is you have to remember that you cannot take this credit on any wages that were forgiven or expected to be forgiven on PPP money. So anything that's allocated to PPP cannot be allocated to ERC. And that is extremely important to remember, especially when you're calling into us and you're giving us your dates of eligibility for ERC. You need to make sure that we know that you have a PPP loan. You need to make sure that we know when you are allocating payrolls to PPP. I can't tell you how many times we have gotten phone calls from clients saying, oh, those wages should have gone to PPP instead of ERC. And it may be too late. We may have already filed for those credits and we're unable to take those credits back. They've already been filed and you're getting a refund from the government. I know right now we have a couple of clients who called in and said they received a check and they weren't supposed to, and now what should they do? So be very, very careful about that. The government really frowns on you taking a refund on money that they gave you with PPP funds. So be very careful about what dates you let us know. When determining the qualified health expenses, the IRS has multiple ways of calculating depending on your circumstances. Generally, they include the employer and the employee pre-tax portion and not any after-tax amounts. When determining the qualified wages that can be included, the employer must first determine the number of full-time employees. So there are two different thresholds. In 2020, the threshold is 100, and in 2021, it is 500. So the way they ask you to do that is you have to look at the calendar year of 2019, again, prior to the pandemic. And you're looking at every person who worked at least 30 hours a week or 130 hours in a month. And you want to take the sum of the number of full-time employees in each calendar month and divide by 12. And that's how they want you to determine whether you have 100 full-time employees or the 500 full-time employees. The employee calculation of full-time equivalents used for the PPP forgiveness report is not calculated the same way as a full-time employee for the employee retention credit. They are only looking for people who have worked 30 hours or more in a week. If you have a bunch of part-time people, they don't add up and make one or many full-time employees. So you just sort of disclude them. You just don't even worry about them. So you're just looking for employees who work full-time. So if you're a gym or a restaurant and you have a lot of part-time employees, you don't have to include them in this. You are just looking for those who work 30 hours or more in a week. I know that gets kind of screwy because when you think about the PPP, what you're doing there is you're taking all these partials. Everybody counts, whether they're part-time or full-time, but in ERC, it doesn't. And it is important that you make this determination, because again, that's one of the qualifiers. Nick, do you have anything to put in on those about the full-time employees?
Nope. No.
All right. You just need to make sure that you use 2019 when you do it as well. Don't look at the 2020. Okay, maximum credit amount for the CARES, the credit is capped at 5,000. For the CAA and the ARPA, it's capped at 7,000. Just want to put a reminder out there. All right, so for a company that had more than 100 full-time employees in 2019, no credit is available for wages paid to the employee performing services for the employer, either teleworking or working at the workplace, even at a reduced capacity due to reduction in business. To determine, this is in 2020, so to determine this 100 employee threshold, the employees of all affiliated companies sharing more than 50% common ownership are aggregated. On the other hand, a company that had 100 or less employees in 2019 is eligible for the credit, even if its employees were working. So there's no credit on the wages. However, there was credit on the healthcare in 2020. So if you were a company of more than 100 and you continued to pay your employees health care, you could earn credit on that amount, but they had to be at home, not working. The CAA brought into effect that 500 employee threshold, but they still gave credit to a company that had 500 or more. You could still get that that healthcare credit. And I believe in 2021 that you could work. I think I put that in there. Let's see. Here it is right here. So they have that severely financially distressed employer. That's a company whose gross receipts for the quarter are less than 10% of gross receipts for the same quarter in 2019. This allowed credit if its employees are performing services, even if it had more than 500 employees in 2019. So that's your severely distressed industries like cruises, hospitality, and entertainment industries. They're only allowed to claim this credit for the second 2 quarters of 2021. So they're just now coming into that. But you have to have that decline of receipts. That's a huge amount. So just make sure that you're still qualifying for that. Furthermore, because of the election to allow a company to calculate credit eligibility by testing gross receipts for the prior quarter, a company could use its second quarter 2021 gross receipts compared to its second quarter of 2019. So keep that in mind too. All right, Paycheck Protection Program loans. So under the original credit rule, a company that received PPP loans was not allowed to claim the employee retention credit. CAA came around and repealed that, made it retroactive. So now you can go back and get those 2020 credits if you're eligible. And then ARPA was the same as CAA, but it also adds that the credit is not allowed for wages paid with the proceeds of an entertainment venue grant or restaurant revitalization grants. So PPP has to be removed, grants have to be removed. So just make sure you let us know that if you qualify for these. Okay. If you think you're eligible, what do you do now? Well, you can reach out to customer service and they're going to send you a link to our ERC survey. So you'll get something that looks like this. Thank you for reaching out about the Employee Retention Credit Program. Below, you'll find a link to the Dominion Payroll ERC survey, also provided as a pricing sheet for our ERC services. Let us know if you have any questions. You click on that link, fill it out to your best of your ability. You can also access the survey on our website. So if you go to the home page, you'll see the green action bar. It says get the latest COVID-19 updates, learn more, click on that. And then you can click on the forms and info, scroll down to the employee retention tax credit, and there you'll see the survey. Also, there's an overview there if you want to read more about this. If you indicate that you are 2020 eligible, you're going to get an automated response from our tax team. It looks like this. It'll give you some instructions and an addendum. And once you reply back to that with your assigned addendum, or you can reply back to it with questions, somebody will reach out to you and get those questions answered or get the process started. If you are 2021 eligible, you'll get this automated response from our tax team. Thank you for filling out our survey before we can process credits, because in 2021, they will be live credits. If you qualify for third quarter, those will be applied to your payrolls live as we go through this quarter. Now, if you are contacting us about first quarter or second quarter, those will be amended 941s at this point. So we will also be able to get you those credits, but it will be an amended 941. So just keep that in mind. You're not going to be denied those credits if you're eligible. We just have a different process for going about that. So anyway, it'll give you a qualifier on how to meet it. Now this one is old, so this one will have a decline of gross receipts of more than 20% and for this one, it's going to say Q2 2021 as compared to Q2 2019 or Q3 2021 as compared to Q3 2019. So that's what you'll see from us. All right, and that kind of wraps up the overview. You want to do some
All right,
questions?
Tracy. Yeah, absolutely. I'll let you get a glass of water after all that, but thanks for all the info. Let's see, it looks like we've got about 9 questions here, so we're going to dive in. Some of these are a little bit more detailed than others, but let's start with Emily. She asks, how does the ERC PPP determine how you allocate your PPP funds to payroll during your covered period? Are you required to allocate funds to payroll for PPP on each payroll run, or could you opt to allocate PPP funds toward payroll costs in Q3 and none in Q2?
That's a very good question, and we get that question a lot. So what you want to think about is when you got your PPP loan. Now, I will say this, if you want to use our PPP report as documentation, when we put in your legal start date or your legal disbursement date of that PPP fund, that's when the payrolls will start being allocated to PPP. And that's what our report uses. It works off of that date. And then you can decide the end date for the PPP. That's not to say that you can't, you know, like if let's say you got your PPP on February 15th and you are eligible for ERC in first quarter, so you want to delay starting your payrolls until, you know, April 1st or something like that. And you can do it, you can do that, but our report can't have a different start date than the disbursement date. It doesn't understand that. It only understands the start date. So it takes a little bit more finesse to be able to do something like that. And we, of course, we don't have a way to start and stop the PPP. So you may have to work on your documentation outside of our system for something like that. But it isn't something that you can't do. It's not that it's not allowed. It's just that it makes your documentation for PPP a little bit more difficult. The other thing is that you don't want to break up payrolls. So ERC is going to take the entire payroll. PPP is going to take the entire payroll. So it kind of works that way. Nick, do you have anything to add on that one?
I do not. I think you answered it
Okay.
completely.
Great. Thank you for that, Tracy and Nick. All right. So Heidi asks, is there somewhere online where we can find a list of official closures for federal and Virginia and even counties within Virginia?
Not that I'm aware of. Anybody else have anything on that?
Yeah, I'm not familiar with like a comprehensive list.
I
I can do a little digging, but I don't know off the top of my head, but I can see what I can find out. So circle back. So the question was a comprehensive list of all the state mandated closures.
Yeah,
Federal, state, and local. And
Oh, gosh.
to my knowledge, the federal government didn't mandate any.
I think most of
Business.
it came down from the state.
Yeah.
Yeah. Yeah, I think so too.
All right. I'll do a little research.
But I
Right,
know
Audrey-
like Richmond had different rules than, like the surrounding counties too. So that would be more like a local, but I think most of it came down from the state.
Erica has just written in saying that if it is state, it would be on the state's health department. So it'd definitely be a good resource to start with in terms of any mandated closures.
Okay,
Thank you, Erica. All right, Audrey says, it is my understanding that if you are under mandatory shutdown for any length of time or experience a decline in gross receipts, not both to qualify. Is that correct? I'm looking at the second quarter of 2020.
Nick, you want to take that one?
Yeah. So I guess it goes quarter by quarter. So if you had one of the two for any time within the quarter, then you would qualify. But for 2020, it would be the 50%, not the 70%. So keep that in mind. If you were under the mandated shutdown, then you would qualify.
Yep, you don't need both to qualify. It's an either or. So that's good.
All right. Michael writes in, are PPP monies includable in gross receipts?
No.
All right. Tracy, that's one of those rare ones where it's a single word answer.
That's right.
All right. Well, something tells me that Emily's question is not going to be yes or a no. All right. Our second round PPP funds were deposited on March 30th, one day before the end of Q1. Payroll was due to Dominion Payroll on March 29th before funds were deposited. Pay date was March 31st, one day after PPP funds were deposited. So will ERC PPP determine that we used any of those deposited funds for that last pay period in Q1? And if so, how much?
So PPP will pick up that whole payroll because it was paid during your covered period. So it'll pick up the entire thing.
Okay. All right, Kathy says, we did not include health insurance benefits in our PPP calculation. So can ERC be taken based just on health insurance?
That is a very good question that I am not sure of the answer on that. You have anything on that, Nick? We might have to research that one.
Research that one because I haven't heard that question before.
That-
It's
I
good.
mean, that's a good question. Health insurance. We are going to be
Kathy.
on next Tuesday doing Cobra, and we'll have an answer for that question at the beginning of that webinar.
All right, Kathy, this is just all part of our strategy to get you to tune in next week. But ring the
That's right.
bell. You stumped our panel, but we will get that info to you. All right, Heidi says, can you still get credit on the part-time wages?
Yes, absolutely. You only have to consider part-time people. You only have to consider full-time people when you're doing your count, but all wages count in ERC.
All right, Rike says, when will Dominion Payroll be able to file our 2020 fourth quarter 941s or 941X?
All right, tax man.
I
Well,
guess the
first of
quick
all, it
answer
depends on
is-
if they've actually let us know that they need to file that.
Right.
That would be the first thing.
But how it works is basically we have that survey that Tracy has talked about throughout the webinar. And once you reply to that, it goes to a master list pretty much with all the information. And if we need more information, then we'll reach out to you to get what we need to file that. But you're basically put on a list, and we just go down the list, doing them as they come in. So it's hard to say when exactly we'll be able to file it, like per which day, but if you respond with the information, then it will be completed.
Nick, thanks
We
for
have
that.
4 years, so that's the good news.
Yeah, it's a bit of a runway on that, so that's good. All right, Erica says, can you go back to the quarters that are covered under the CAA? If I am looking at quarter one from 2021, I have to compare against quarter one of 2019. But you said something about the next quarter. Can you clarify?
So you have 2 quarters that you can use. If you're looking at quarter one of 2021, you can qualify using the gross receipts of quarter one 2021 as compared to quarter one of 2019. But you could also use quarter four of 2020 as compared to quarter four of 2019. So you can either use the quarter that you're in or the preceding quarter to qualify.
All right, perfect. All right, Anonymous writes in saying that a colleague told me I am too late to apply for 2020. However, you did mention we have 4 years to apply. Please confirm and thank you.
Nick, you want to take that one?
I mean, basically the same question as I believe it was Rike. If you fill out that survey, I mean, you can reach out to us directly or to customer service, and we can send you that survey and then fill out
But
the
it's
info.
not too late.
No,
Not too
no.
late.
To answer the
And
question,
you
it's
need
not.
to school your colleague
Yeah.
because it's not too late. Like Rick and like Nick said, you have 4 years. Well, basically 3 years now for 2020, right? Because we're already to 2021. I
Right.
think it's 3 years now. But
Haven't
yes.
taken advantage of it.
Yep.
All right, Anonymous, your colleague owes you a lunch, I think.
For real.
All right. Heidi asks, is there a report in iSolve where you can run eligible wages for a defined period?
Yes, there is. You just go to client reports, client reports, put in the filter cares, and you're going to see the first 2 reports. One is going to be for the 2020, and the second one's going to be for 2021. So you can just run that. I believe, though, in order for that to work, you're going to need to let us know. You'll need to send something into customer service because we have to put in a legal start date for you. Once that happens, the reports will populate. If you don't have a start date, then the reports come back as 0. So just let us know what the start date that you're looking at is, and then we can enter that in and you can look at the reports yourself.
All right, thanks for that, Tracy. Right now, this is looking like our last question in the Q&A. Also from Heidi. Heidi, you've been our rock star today. Thank you for all the questions. She says, related party wages are excluded. Does this include the company owner and his or her spouse? I didn't see them included in the list.
Kevin, you're cutting out.
I'm sorry. Am I coming at all better right now?
Yeah.
Okay, apologies for that. Trying to position myself in a quiet corner of the office today is proving difficult. So to repeat Heidi's question, she says, related party wages are excluded. Does this include the company owner and his or her spouse? I didn't see them included in the list of excluded parties.
So believe, if I'm correct, the owner is included, but like I think if you have children that work for you, they are excluded. Does that sound right, Nick? There are some rules on that, but I can't remember exactly.
Yeah, I can't remember either.
All right.
But I know there are some.
We'll look that
Definitely
up.
research it. Yeah.
And we'll have it at the beginning of next week's webinar. So excluded wages. Okay. Yep, I got
Heidi,
it.
Heidi gives you a full caps thank you, 3
Awesome.
exclamation points. You're very welcome, Heidi. Happy to be of service here. And it looks like our colleague Leslie has dropped a link in the chat for everybody. Leslie, you want to tell us what you found?
Yeah, I don't know if this is helpful, but it's a Ballotpedia page that has a list, a state-by-state list of it looks like the executive orders for people to stay home. I don't know if that's helpful or even answers the question. It gives a time frame for each state and then links to the order. So that could be one resource to sort of remind yourselves when these, what the time frame of the stay-at-home orders at least were issued. I don't know if that exactly answers the question.
I think it certainly would give our clients and folks out there a good jumping off point for sure.
Yeah, I mean, I think, and like what Tracy said, it really depends on what industry you're in and what kind of communication you have saying that you needed to shut down or reduce service. But this definitely sort of jogs my memory in terms of the time frame. So I'll keep looking, but Ballotpedia has a ton of stuff like this. So it's a good site to have, but also, as our listener pointed out, the Department of Health in your respective state should also have more specific resources for you.
Perfect. Thank you, Leslie.
Mhm.
Heidi asks, where is this list? So Heidi, if you go to the chat, that you should see that at the bottom of your screen. There's a link to ballotpedia.org, and that's going to give you state by state, executive issues and lockdown orders. So that should be a good resource to double check the orders in your state. All right, folks. Let's see. Tracy, do you want to cue or tease next Tuesday's webinar? Let folks know what they can tune into.
So next week, we'll be answering these questions on the ERC, and of course, we'll take questions on ERC or PPP, but we're going to do a review of the COBRA credits. It won't be a super long webinar. I just want to make sure that people understand about the COBRA credits as we go forward, because some people are trying to take advantage of that.
Awesome. Well, that sounds intriguing, and I will be your right-hand man for all questions and all comers.
Everyone loves Cobra.
Absolutely.
Oh my God.
But actually, the ARPA, I think it's if you have employees that qualify, I think it's a really good program. It's just Cobra seems to confound a lot of people, myself included. So I've actually learned quite a bit about it during under ARPA. So silver linings.
Yeah.
Just want to remind everybody that HR Matters is taking a holiday break this week, so there will be no HR focused programming this week. We'll be back in 2 weeks with a topic TBD.
I love it. Perfect.
Not sure what it'll be, but it'll be something.
All right. Sounds good. Thanks. All right. Thanks, everybody.
Yeah.
Great week.
No more questions. I hope everybody has a great week and had a happy 4th. We'll see everybody this time next week.
Yep. Have a good day.
Bye, guys.
Bye.